What's up, guys? Today we're going to look at Dave's stock and figure out how it is up 133% in the past month. We're going to take a deep dive into their financials and a quick preview. So, this previous quarter, reporting May 8th, they beat earnings per share expectations by $1.21 per share. They beat revenue expectations by $14 million. And this company is growing at a very fast rate, which we're about to take a look at in a second. But first things first, what this company does is they offer short-term loans to their members that can be spent on rent, bills, gas, whatever the case may be. And this is up to $500. They offer online financial services to their customers through their mobile app, which is just another form of banking. They have about 11 million members, and that is how this company is making money. So just to dive deeper into this, their extra cash product, what it is $25 to $500 in short-term loans. The average is $192. It bridges gaps between paychecks for essential expenses like rent, gas, groceries, and typically the term for this is 1 to 2 weeks. Their underwriting is cash flow based on their bank account data. There's instant decisioning, it says here, and no credit score or relationship requirements. So that's one of their great products that they offer, giving them a competitive advantage against their rivals. They also offer debit cards. So really it's just an online bank. They have a mobile app which tries to help their customers, monitor their finances, make sure they're making ends meet. And their Q1 highlights in terms of their financials, they had total revenue growth of 47% year-over-year growth, $108 million Q1 2025 versus $74 million in revenue for Q1 of 2024. Their adjusted EBITDA grew $31 million year over year. They now have $44 million adjusted EBITDA for Q1 2025 versus Q1 2024, which was $13 million. Their extra cash origination volume has grown 46% year over year, and their 28 delinquency rate is at 1.5% for Q1 2025. Very important for a company that is giving short-term loans to people who are probably not making their financial ends meet on a monthly basis. So you really want to see that they are not having a high delinquency rate. That could be very bad news for this company. But they also increased their 2025 revenue and adjusted EBITDA guidance. They're now looking at a total revenue for this year of $460 million to $475 million, which would represent 33 to 37% year-over-year growth. And they're looking at adjusted EBITDA of $155 million to $165 million, which would be 79 to 91% year-over-year growth. So this company is growing their profitability very, very quickly. And guys, the best part is this company is not at a terrible valuation for a company that might be growing its revenue at a 33 to 37% rate. So you're looking at a valuation right now, a forward PE of 33, according to Seeking Alpha, and a current PE of 56. But still, this company is only $2.78 billion in market cap. They have total debt of $75 million, and they have $88 million, according to Seeking Alpha. So this company is growing very quickly. This company was initially backed by Mark Cuban, and it's a very interesting point to make. Also, analysts are currently increasing their forecast for the stock. Now increasing this analyst is increasing his forecast to $239 per share, up from his previous $206 per share, which is very interesting. If we look at the 8 overall analyst ratings, we're getting 100% buy with a median price forecast of $200 per share and a high of $239 per share. Let me know if you think that this stock is worth the buy. It's a very interesting story with the growth that this stock has had. And if you like this video, please consider subscribing. Y'all take care.